Hey traders, today marks day number 44 of the $1,000 account challenge, and it's a red day for me. I'm down $168 in the account, or 4.5% of the total portfolio balance. Now, if you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options to see how far we can grow this account. I'm up multiple hundreds of percents in the account so far. So today I was okay with assuming a little bit more risk than what I normally would. We're going to walk you through the trades that I took and why they wound up being red trades. To begin with, we'll start with the day trade watch list. AMD was a long idea above $178 and a short idea below $175. We're on the 1 minute time frame here for AMD. We get opening consolidation below the previous day's closing price and a break below 175 right here on this big candle. So let me move this trend line down to 175. So when we get this move down, I'm looking at this as confirmation that AMD is indeed coming down. However, I did not want to market buy into this drop. I was looking for a rally up, retest of 175 and a move lower. Unfortunately, we just don't get that in this first drop, and it's a pretty aggressive sell-off. 4 red candles in a row down to the low of day where it consolidates and reverses. So looking at that as a confirmation, when this does rally up and retest 175 area, I'm using the opening consolidation as a point of old support, now new resistance, to take the stock short at that resistance, looking for the reversal move back down. I do enter in at the top of this candle just below 175.5 with the stop loss just above, and unfortunately the stop loss gets hit. Nothing we can do here. So it's a very tight risk type of trade. You know, the risk amount looks like this versus the potential reward. Let's just say even down to VWAP area looks like that. I mean, the amount of risk assumed versus the amount of reward, very small, right? So the risk versus reward here, in my opinion, was worth it. Unfortunately, we just did not get the follow through after the initial drop on AMD. So I'm a little salty that I missed the first drop over here, but we did the best that we absolutely could on the re-entry. Just didn't work. No harm, no foul. And we made the right choice, by the way, closing the position out here. I think it was about a 12 or 13% loss. Closing the position out there was the right choice because look at the move that followed. It continued to run up and up and up. This could have easily been a 20, 30, 40, 50% loss. That was the first trade on AMD. Second trade that I want to review was on Tesla. Now, this was a long idea straight off the day trade watch list above $205. It's a gap up day on Tesla, so this is very important. Gap up day on Tesla with the pre-market highs placed at 205. Now, the ideal scenario on a gap up day is an opening dip that gets bought back up to run the stock to the high of day and hopefully through the high of day for a continuation. The reason why this is the ideal scenario is because the stock is extended, right, from the gap up. Of course, you're naturally going to have those that were swing trading this or holding overnight, taking profits shortly after the open. And when that happens, what we want to see is buyers, dip buyers, step in and run this stock back up. So that's what led me to take the entry that I did. Now, the stock did not break 205 when I took my entry, but I had a break of the downtrend trend line right here and increasing volume on this larger candle up as well as higher highs. So when we were offered a dip pullback here, I went ahead and took the entry long there. We do get the run up to the high of day. Now this is where the mistake was made. I was up 20% on this position at the high of day, and I did not take profits. 9 times out of 10, I am taking profits on that position, but what I decided to do here maybe was a fatal mistake, maybe not. Maybe I was just okay with the amount of risk assumed, but I decided to hold because I was thinking maybe this pulls back, puts in a higher low, and then rallies right back up. And then in the instance that Tesla did do that, I wanted to take larger size I wanted to add to my position size on this trade. You know, I initially took a starter entry, a smaller size entry than I normally would, to mitigate the risk. So when we were up 20% on the trade, you know, it wasn't that much from a monetary standpoint for me to take the profits on. Now, looking in hindsight, obviously that was a mistake. However, when it pulled back, I wanted to add to the position once it started to rally back up because I really did think that maybe we were going to get a gap fill run topside into and through the high of day. And we just didn't get that. So I would have added size on the position on a break of 205 after it held and confirmed. it never got there. So instead of me adding to this position, I let this position run against me quite a bit. Probably should have just cut it over here the moment that it started to create a lower low. Could have cut the trade at break even after being up 20%. But I did let this go against me quite a bit, and I think I closed it out for about a 30% loss. But Tesla, like I said, on this position was a starter size, so the monetary value lost isn't that much. Now, those two losing trades does put me red on the day, again, down $168 in the account, but we're coming off of like 4 or 5 green days in a row, so I do have a profit margin built up to be able to start assuming a bit more risk like this in the trades that I took. Does this mean I'm going to do this every single day? Gosh, I hope not, right? But can I start taking on a bit more risk in hopes of gaining a bit more reward? Absolutely. So that's it. Those are the trades that I took today. I hope that the video has helped you out. If it has, press that like button for me and consider subscribing to the YouTube channel if you haven't done so already. It's just the best way to support this type of work that I do. Again, thank you for your time, and I will see you tomorrow when we continue the $1,000 account challenge. Cheers.